I think this is one of the support for the market we identified. So I think the macro story is more and more accepted by investors. The reflationary trade is in full swing and is getting quite consensus, I would say. But I think bottom up, we do also believe there is some support to this bull market, and we do think there's a lot of cash that can be deployed by businesses. And even though we had a terrible crisis in 2020, which is, by the way, not finished completely, we've seen a fairly resilient corporate sector, partly because the government support schemes have been efficient. Financing conditions are quite favorable as well, and the capital markets are fully operating, right? So I do think that there is a bit of self-help as well to come through from the corporate sector that could somewhat come with the macro improvement that we expect for this year. So M&A, buybacks, dividends, and maybe capex as well should help sentiment as it comes through this year.
And looking at Europe relative to other parts of the world, market performance in 2020 was resilient, but European markets did underperform the U.S. I mean, to what extent is that a draw for acquirers looking at the valuation differential between European and U.S. markets?
I mean, ultimately, a lot of the European underperformance was due to sector composition, and the US market was helped a lot by the strength of the tech sector, which is the dominant sector in terms of market cap. And Europe was not able to compete simply because it doesn't have as much tech as the US has. But I think from an economic standpoint, we do think Europe should be leading the recovery this year simply because the base effects are the most favorable there, and hopefully that's really one of the most benefiting regions from the vaccine deployment, right? So the delta in the economy that we expect for this year should be fairly strong in Europe, and that should somewhat, help sentiment to come back to the region.